I'm Jagir. In today's video, we're going to cover how to become risk-free with your investments in crypto and blockchain. How to become risk-free. It's one of the most beautiful things if you know how to do it. Why? Because it means the worst that can happen is that you break even. Right? Risk-free meaning break even. That's the worst thing. And what's the best thing? You have this huge upside potential. So if you're excited about today's video, hit the like button, subscribe, hit the bell notification so you get informed of when I'm dropping these golden nuggets of wisdom when it comes to crypto, blockchain, in English, in layman's terms, so you can make it practical for your investment strategy. And if you're thinking, who is this guy? He's handsome. Well, I am Jagir. I am the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. And a big part of this is risk management. So Warren Buffett, he's a wise guy. He's not really a tech kind of investor or such, but he's a wise guy. And when it comes to investing rules, we want to pay attention. So rule number one of Warren is never lose money, right? Never lose money. But he also has a rule number two. And I covered this in one of my previous lessons, was don't forget rule number one, never lose money. So I want to give you an example because this has been very popular with my students. And once they learn this, they go, wow, this has changed everything. I don't feel as panicky. I can sleep well. I don't feel like an emotional wreck. Fear and euphoria and fear, excitement, fear. It's like this crazy price has gone up, price has gone down, price has gone up. Right. We want to make you more professional so you can go be more mechanical, more objective, more business-like. So let's just do this. The objective with your investment is to get risk-free as soon as possible, but more importantly, in a non-emotional fashion. It's mechanical, it's objective, it's repeatable, it's simple, it's logical, so you can kind of be at peace with yourself with your longer-term strategy. So it's all about the exit, and I recommend having two exits. Right? Exit one is all about your insurance policy. Exit two is all about profit. Right? So we want to really focus on not losing money, right? Don't get too excited about making the 20x gains and the 100x gains, 1,000 to 100,000 or 1,000 to 10,000. Yes, it's possible. And if you've already done it, brilliant. But we also want to mitigate the risk. We want to address that because most people get just too focused on the positive. We need to look at the reality and say, look, markets can move down and we want to protect ourselves where we can on the downside. So here's a simple strategy for you. So I'm just going to do it in layman's terms in terms of investment, how much we're going to invest, the return on that investment, and then in percentage terms and in monetary terms. Let me pull out my laser so I can kind of make reference to these as well. The exit of the original investment, and then how much we still have in the investment. So now let's just think about this, right? You found a project for whatever reason, you say it's backed by a great venture capitalist, it's solving a big problem, it's early, and it's in this particular narrative. It's in the decentralized finance space and it's doing something unique, let's just say. So it gives you confidence to go, right, I want to invest $1,000 into this because I believe it's got a huge upside potential, right? But no one knows what's going to happen. No matter how good my Elliott wave and Fibonacci theory analysis is, or any other technical analyst is, how good the fundamentals are, how good anything else is, the price can go up and the price can go down. You can make money, but you can also lose money. And you have to have that reality check. But if you understand that, then you want to have your insurance policy. So this is what I teach my students. This is what I do myself. Is choose a multiple. If you're really just starting out, I would recommend choosing 2x or 200% return. Meaning when you invested 1,000 and it doubles, if it doubles, 1,000 turns to 2,000, which is a 200% return. You want to now exit your original position, so you're risk-free. So that means if the rest of the position tanks for whatever reason, you're risk-free and you've lost nothing. And if it goes up to the moon, great, make some amazing profits. So you exit 50%, because why 50%? Well, if you make 2x, to take your original 1,000 off the table, it has to be 50%. But you still got $1,000 in the position, but now you're risk-free. I hope that's making sense. So you got $1,000, you invest it, it doubles, the project's doing well, it's now worth $2,000. But we're not just optimistic fools. We are logical beings, and we want to treat this like a business and go, right, there's, especially if you've done my Elliott wave theory and my Fibonacci theory course, there's an element that I have as a course that just goes into it in more detail, and you go, oh, it looks like it's hitting a potential high, let's exit 50%, become risk free, and leave 1,000 to ride the longer wave. Another example, let's say you're a bit more educated now, you're a bit more sophisticated, you got a bit of a feel for it, you've got some success under your belt, you've got 10 successful investments that have become risk free and made some good profit. Now you go, oh, actually, now I feel more comfortable with a 3x rule. So it means when it has a 300% return, I exit 1/3, which is my original investment. So then I'm risk free. So what does that mean? So 1,000 invested. Let's just say it was, let's keep it simple. Let's just say it was, let's say it was Bitcoin. You're aware of Bitcoin. Let's just say let's just go back to 2017 and say you invested in Bitcoin when it was $3,000, sorry, $1,000, and it went to $3,000 per Bitcoin. You would get a 3x return. So you're literally made $2,000. So you're 2,000 up, but your total portfolio in that investment is 3,000. To get your money off the table, you will need to exit 1/3, which is 1,000 back in your pocket, but you still got 2,000 in the investment. So if it makes higher highs, you really get that upside, but without the downside, right? So this is simple, and you want to apply this straight away if you haven't already. Exit 1 is insurance, right? This is being realistic. It's looking, going, look, what's the worst case scenario? Yes, every single project's price can go down, and you'll see it goes up and down. It doesn't just go up in one direction, right? You've seen it. It comes down, and it can go down more than expected. So you want to have that insurance policy in place. It will give you peace of mind. It will eliminate or mitigate or reduce at least fear of missing out. It will reduce fear, uncertainty, and doubt, because there's always constant news, and you almost want to ignore it as much as you can and go, right, I believe in the project. It's still bull market. I've got reason to believe it'll go up, but just in case it doesn't, I want to have my risk management in play. So there you have it. Now you know how to become risk-free with your crypto portfolio, your crypto investments, whether it's the bigger coins like Bitcoin or Ethereum, or whether it's the younger projects that are not in the top 100 but have potential to become in the top 100. You want to apply proper, consistent risk management. Trust me, change your life forever. Why? Gives you peace of mind. And if you get to risk-free, it's one of the best places. Now, if you've enjoyed today's video, like, subscribe, hit the bell notification, because I want to bring you these daily nuggets, simplifying this complex topic, especially if you're new. And if you are new, I've actually created a free crypto masterclass for you, how to fund your retirement, where I go over this in a lot more detail, all the way from what is Bitcoin. I kind of use a lot of great examples of, A to Z of the whole position and how to manage it, or how to create a trade log and an investment log, how to manage your positions, how to find low cap gems or young projects that have high potential. And that's in the free masterclass, which will be in the link below in the description. All right, I'll see you soon in one of my future videos.